Today, Bitcoin trades above $97,000 following a solid jobs report. Tether's CEO tells CNBC the firm's preparing to launch a US-based stablecoin. And Alison Mangiero with the Crypto Council for Innovation explains why industry leaders are urging the SEC for clarity on staking. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Crypto markets mixed to cap the week, with Bitcoin trading above the $97,000 level as of noon Eastern, following a better-than-expected jobs report for April. Ether, however, dipped more than 0.5%, and Solana fell more than 1% to just under $150. For the week, Bitcoin climbed more than 2% as of noon and is on pace for its third weekly gain in a row for the first time since a 4-week rally ended in November 2024. And Ether is up nearly 2.5%, on pace for its third weekly gain in a row. Taking a look at crypto-focused stocks, all are in the green as of noon following that solid jobs report, which eased recession fears and put the S&P on pace for its longest winning streak in more than 2 decades. As of midday, Strategy was up more than 3.5% after the company's Q1 earnings missed estimates. Bitcoin miner Riot soared more than 12% after beating revenue estimates in the first quarter. Okay, let's talk about the top stories. PayPal says the SEC ended its probe into the company's stablecoin. In a filing submitted this week, PayPal revealed that in February, the SEC communicated that the investigation would be closing with no enforcement action being taken. PayPal says it originally received a subpoena in November of 2023 relating to its stablecoin, which was launched 3 months before. That stablecoin was the first US dollar-backed crypto product from a major American financial institution. Since President Trump's second term kicked off, the SEC dropped several lawsuits and investigations against crypto companies, including Ripple and Coinbase. Sticking with stablecoins, Tether is getting ready to launch a US-based stablecoin as soon as this year. That's according to Tether CEO Paulo Ardoinho, who is ramping up his presence in Washington to shape crypto regulation. This comes as 2 stablecoin bills are making their way through the legislative process here in the US. Speaking with CNBC this week, Ardoinho said a US stablecoin would be different from the international one. Tether, which is the world's largest stablecoin issuer, has faced scrutiny by U.S. lawmakers and regulators in the past. In fact, in 2021, the firm settled with the New York Attorney General for $18.5 million over allegations that Tether lied about its reserves. Ardoinho told CNBC that Tether collaborates with many law enforcement agencies and has monitoring tools in place. Last yesterday, Sam Altman's controversial iris scanning crypto project launched in the U.S. The debut comes even as concerns around the biometric data collection and processing still stand. Now, this week, the World Network, formerly known as WorldCoin, also announced the planned launch of a payments card with payments giant Visa and a partnership with online dating service Match Group, starting with Tinder users in Japan. When WorldCoin first launched about 2 years ago, there was a lot of talk surrounding those controversial eyeball scanning identification devices called orbs. Privacy concerns prompted several countries, including Spain and Portugal, to place temporary bans on the use of those devices. World has stated that privacy is a core principle of the project and that it implemented safeguards to protect user data. All right, for our main story, I spoke with Alison Mangiero, the head of staking policy at the Crypto Council for Innovation, after a coalition of 30 key players in the industry, led by the council, called on the SEC to clarify regulations on staking. That's a way for investors to earn passive yield on crypto holdings by locking tokens up on a network for a period of time. The coalition sent a joint letter this week laying out why they think staking should not be treated as securities offerings. CCI, along with nearly 30 crypto organizations, sent a letter to the SEC's Crypto Task Force a couple of days ago, urging the agency to provide clear guidance on the regulatory treatment of staking. Now, this letter, addressed to Commissioner Hester Peirce, is in response to her call for public input on whether staking and liquid staking should be regulated under the federal securities laws. The agency has historically viewed some staking services as potential unregistered securities offerings. However, a more crypto-friendly SEC has been moving quickly to change course. Right now, there is no official word on the agency's current stance on staking, but I'm wondering what you're hoping to see on that front. What are some of the main points in your letter to the regulator?
Yeah, so basically in the letter, we're asking for 2 things. One is clear principle-based guidance akin to the recently released statement on proof of work mining. So in that letter that they recently released, SEC says that if you are contributing resources, so in the case of proof of work mining, that's compute power, to secure a network, that does not fall under the federal securities laws because the activity that you're engaging in is really administrative in nature. And we think the same thing is true for staking. In the case of staking, you are also contributing a resource, a staked asset, to participate in securing the network. And so what we're basically advocating for in the letter is clear principle-based guidance, very similar to the treatment of proof of work mining, so that staking is treated the same in the eyes of the agency. And the second case that we make is basically that the more general point that these things should not be regulated as securities, that they are truly technical services and should be treated as such.
Now, the topic of staking is getting more focused lately. In fact, Senator Cynthia Lummis, the chair of the Senate Banking Subcommittee on Digital Assets, recently called on the SEC for clarification on digital asset ETF staking restrictions. What does that move signal to you? Does it show you that the topic of staking is, in fact, becoming more of a priority?
Yes, it does. I think what we've seen is in the past 5 years, the staking market has gone from around $19 million to at its peak a $600 billion industry. So this is something that both on the Hill and within the regulatory agencies, folks are starting to realize they have to get right. And so I think last year, the industry, generally speaking, was very excited about ETH ETFs being approved. But there was this question about why the issuers were asked to remove staking from those S1s. And so it was incredibly encouraging to us to see this bipartisan coalition of senators asking the SEC why that was and encouraging them to consider protocol staking in ETPs so that the US can be on par with the rest of the world on this.
So you argue that in the past 4 months, there has been more movement and constructive dialogue with the SEC than the past 4 years. What do you attribute that to? Is it because of the new administration and the appointment of crypto-friendly SEC Chair Paul Atkins? And what does this shift signal to you in terms of what it could mean for other legislative priorities tied to crypto?
So I think what we're seeing actually, even before the new commissioner had taken over, we saw an incredible shift. And so in January, you see the creation of this new SEC task force. Since the creation of the task force, there have been a series of roundtables that they're calling the Spring Sprint Toward Crypto Clarity, where they're trying to get input on things ranging from custody to DeFi and topics like staking. We've seen staff statements on not only proof of work mining, but also stable coins and meme coins. And so you're seeing an energy within the agency and movement that is quite dissimilar to what we were seeing under Gensler, where we were just seeing enforcement action. So I think part of what that is that industry has been standing ready to engage constructively with the regulator, and also, by the way, with lawmakers on Capitol Hill. So we're also seeing a lot of movement there, where already in the first 100 days of the Trump administration, we've seen 2 stablecoin bills introduced and market structure tax about to drop any minute. So just a lot of positive movement all around.
And President Trump said he hopes lawmakers will send stablecoin legislation to his desk before Congress's August recess. Do you think that will happen? Is that plausible?
That is what everyone is sprinting towards. I think it's going to be an incredibly busy couple of months on Capitol Hill, but that's the goal. And I think congressional members and staff alike are ready and aiming toward that goal. And those of us at CCI and the other trade associations are trying to help move the ball forward there.
I want to expand on something that you brought up. On President Trump's inauguration day, Gary Gensler stepped down from his role as SEC chair. Now, Gensler was widely criticized by the digital asset industry for his regulation by enforcement approach to crypto. And since Gensler's departure, as you mentioned, several crypto companies, including Ripple, Coinbase, and Kraken, saw lawsuits or investigations dropped, resolved, or put on hold by the agency. What do you think about that? And what do you think the new SEC chair, Paul Atkins, can accomplish as it relates to crypto?
Yeah, so I think there are basically 2 major trends under the previous administration, especially as pertains to staking. First, in many cases, you had regulators trying to draw what I see as a direct line from lending to staking, when there's actually a world of difference between the two. So lending basically means you're giving up control of your assets in exchange for earning interest. But in the case of staking, you're locking up your tokens to perform a network function. So incredibly different. And I think secondly, under Gensler, he took the view that these various staking models constituted unregistered securities offerings. We've seen that proven wrong. So Kraken did settle. This was in 2023, but there was no admission of guilt. In February, you saw the Coinbase lawsuit dismissed, and that was with prejudice. And so I think that's incredibly telling. And since then, a number of other state regulators have also dropped these cases against Coinbase. And so I think there's positive movement in that direction. And I think there's an incredible opportunity for Atkins to get this right. You saw he just issued his first statement in the last crypto roundtable. And I think everyone is looking forward to forward movement and continued positive engagement with the agency.
As you noted, this week marked 100 days of President Trump's second term, in which we saw a slew of crypto-related activities, including the establishment of a strategic Bitcoin reserve and the formation of a crypto task force. Do you think these crypto-related actions are a good start, or do you think more needs to be done? How would you rate Trump's first 100 days in office as it relates to crypto?
I think that they are a good start, but that more work does in fact have to be done. I think that both things can be true. And so I would say that while the industry has been incredibly heartened to see so much movement in this first 100 days, we're very much looking forward to the next 100 days and what we can get done.
Okay, that's all for Crypto World this week. We'll be back again on Monday, and we'll see you then.